Right, so this is a big one. Why EAs haven't worked for you in the past, and with a big yet here, because this is the stuff within the program and the course that you're going to learn, which is going to change this as a reality for you. But there are some really key things here that I want to talk about, which then enables you to see why they haven't worked and the things that you need to do to adapt to that, change it to make sure you start seeing success. So the first thing is this whole set and forget misconception. And to understand that it's really easy to sell people what they want to hear. Yeah. If I get a DM and it's how much does this make a month? My answer to that is, well, that's an impossible question because of all these variables, risk, pairs, strategies. There's no answer to that. However, I could choose to answer it by saying, oh, yeah, 20% a month, blah, blah, blah. And that would be totally incorrect. So, A, it's the wrong question to ask because B, you're teeing yourself up for just being, lied to and telling you what you want to hear. That's why a lot of people get fooled into this stuff and then it doesn't work and they rinse and repeat, rinse and repeat, rinse and repeat. And then they think EAs don't work, which is false. Of course they work. But it's a trading tool that you've got to know, respect, and understand how to deploy it in the markets. So this set and forget misconception, there is not one EA that can run forever without ever changing settings or strategies or approach. Why? Well, that's just crazy when you think about it, right? Because markets change, markets trend, markets range, and there are key fundamental worldwide things that happen that cause different markets to move at different times in different ways. So let's look at the UK. Let's look at Brexit all them years ago and how pound moved. Let's look at coronavirus and the big rally across yen moves, gold moves. You can't factor them huge political events into all of your trading ideals and strategies and parameters to a point. Now, if you did, and maybe subject to how you run an EA, maybe you could. However, it would be at such high compromise. It wouldn't be an efficient way to trade. So in order to survive all of those things or events, your expectation from that set and forget set file might be to make 6 to 10% a year. Yeah, with probably 6 to 10% drawdown a year. So really, really small gains because you're compromising your strategies and your approaches because you're trying to make it fit all the different ways the markets can move. Okay. So this whole idea that we can have one set file, set and forget, that passes challenges and makes 10% a month without losing 10%, that can be run on funded live funds without ever touching it, is a totally flawed misconception. Okay. So by applying the knowledge and the strategies and the approaches we go through within POW, you'll see about that. You'll understand that. So point 2 here is just the lack of strategy knowledge. So many people, and like me in my early days, I'd buy EAs and the parameters weren't clear and I had absolutely no clue what the rules were in this strategy. What is this tool doing? And surely you've got to know what the EA is doing, why it's opening trades when it's opening, and what the strategies are. Otherwise, everything's going to be a surprise. Oh, I didn't know it was going to open a trade there, or I wasn't expecting that. As soon as that happens, you're not prepared. And that creates doubts too, right? Because you don't know what's going to happen. So strategy knowledge is key. And again, within POW, we teach you all the different ways of using the EA and the strategies that you can use to deploy and what's going to happen and when. So that strategy knowledge is really key for you to then be able to choose a balanced portfolio to use our trading tool in a sustainable way. A lot of EAs as well don't come with risk management. A lot of EAs out there are just an aggressive martingale approach with no risk management. So invariably, that account's going to blow at some point, one would say. Depends on how you're running and what the account size is and et cetera, et cetera. But also, this is a little bit of naivety from the trader's part, and that was the same for me in the early days too. I wouldn't have asked, well, how am I managing risk here? Because there's no strategy knowledge. So when big drawdown happens and your account blows, you didn't know what it was doing. You didn't have any external risk management if the EA didn't cover it. And all of a sudden, you're just a victim. Yeah. When actually we have to look openly and go, hang on, I didn't ask great questions or understand about strategy knowledge. There was no education, no support, and I didn't cover off my own risk by taking responsibility of the amount that I was exposed to by using equity protection or whatever on the account. So that's an own goal by us. That's something we have to take responsibility for and learn from. Okay. Another thing, broker variances. It's okay seeing a lovely backtest for broker A, but if you then run it on broker B, that broker A backtest is totally irrelevant. Tick data is very different broker to broker. There are lots of different tweaks and anomalies to that. So again, this is stuff that isn't commonly shared in the marketplace, because it's very easy for me to just show you a nice backtest and say, crack on, and you run it on your own broker and you just don't get anywhere close to the results. Or it's just overfit data. So they've not followed, or you've not followed a robust testing process using walk forward and understanding how to do a robust strategy testing. And basically that back test is just overfit. As soon as you run live in the market, it's just not going to play out. Yeah. So again, we teach this in POW, and, understanding how to do a robust test to reduce the risk of overfitting and using this walk forward phasing stage of the market is really fundamentally important. Another reason why EAs haven't worked is just not changing with the markets. Now, markets will trend, they will range, and they will trend and range in various different breadths of strength too. We could have steady trending markets, we could have aggressive trending markets, etc. So what we encourage and teach within POW is that we can phase the market in different ways and piggyback on the last 10 weeks or 3 months or 6 months of market data to stay in line with what's going on in the world. A bit like, COVID, when that moved the markets, if that phasing would have worked, we would have been caught out at times with different risk and different losses at different times. But we'd be more in line with how the markets are moving, as opposed to running with something that's worked on 5 years worth of data before, which is a load of BS, right? So understand markets change, and we've got to change with the markets and be as in line with those market conditions as we can. Also, traders don't diversify enough using EA tools. Most EA tools are provided with, here's an EA, here's a set file, thank you very much, best of luck. And what we do differently, as you will see in the other videos, is compartmentalize and create different baskets of risk, because we can trade our EA in numerous different ways. So if we can have a trend trading set and a range trading set on a basket of pairs, then we've got a tool for the right market conditions at the right time. Nothing's perfect. Trends can reverse and ranging markets can trend. That's always going to be the case. This is not about trying to strive for perfection, because it doesn't exist. It's about making sure we stack the cards in our favor as much as possible. So we encourage as much account diversification as possible, because that A, reduces risk, and B, can really leverage stronger returns, because you've got more tools deployed at the same time. Yeah. Another reason is this mindset thing. Again, I could have the same set file, the same strategy with 10 other traders, and some of them will stick to it, some of them won't, some of them will overtinker, some of them will misunderstand, some of them will let greed and fear take over, and some other traders will make poor decisions. This will always be the case unless you focus just as much on this mindset gig as you do the strategy gig. Yeah. So if you look at the trading success, it's not 100% strategy. It's 25% strategy, 25% knowing how to use the strategy, 25% mindset, and 25% maybe support and accountability and all of that stuff. Okay. So people think when they're using an EA that, I've got no decisions to make or no emotions. Well, the truth is that that's incorrect. There are going to be a lot less decisions to make, a lot less chart time. However, there are still decisions to make. What to set up, how to backtest, if they're trying to shortcut things or not, if they understand things or are jumping straight in. Fear and greed are also there. Somebody who has a great 48 hours joining as a member might think they've cracked the code and then just give it all back later because they've got overconfident. Same with fear, profits disappearing or whatever all of those things are. There's a huge part of this is in terms of the baseline level of mindset and understanding. And then, two more things here. So education around some of this stuff. It's not sexy. Yeah. again, comes back to this bit here of people and what's sellable and what people want to hear. What people want to hear is that this stuff's easy. You just plug and play. It's set and forget. Passive income. Live happily ever after. Well, that's not the truth. So by educating everybody in these areas around robust backtesting, markets changing, we actually, instead of giving you a fish that actually is a plastic fish that you can't eat anyway, we're teaching you how to fish properly. Okay. And some of it's not sexy and some of it's hard. But to make income in this space is going to be hard at times. It's totally naive to think all of this is going to be easy and everyone who starts trading is going to be a millionaire and orders a Lamborghini overnight. That's totally flawed. Okay. And then poor support. So again, a lot of the EAs, you buy the EA, you have a question, there's no support, or you email in, you get blanked. Again, we have a really strong infrastructure and knowledge base around our EA and the support there afterwards too. So the purpose of the video is to explain why EAs haven't worked for you before, list those points, give you some context to it so you can see that what you're going to learn within this program and how we're going to structure and provide you with the knowledge is a sustainable way of using EAs to trade. Okay. And we're going to basically flip all these on its head. We're going to give you the strategy knowledge. We're going to teach you about risk management. We're going to talk about broker variances. We're going to teach you how not to overfit or to reduce the risk of overfitting. We're going to use walk forward phasing. We're going to understand how to change in line with the markets. We're going to diversify your trading account in all of these different ways. And we're going to fill the hole with a load of mindset stuff that's really going to help you be more resilient, make better decisions, understand your cognitive biases, and make sure that you're set up to be able to capitalize on using these tools for the trading goals and outcomes that you're trying to achieve. So, see you on the next module.